Okay, so when you're putting money away for retirement in your 401k, 403b, SEP IRA, et cetera, we have a limit of how much you're allowed to contribute to that on a tax deferred basis because the government wants to make sure they still get their fair share from you this year. So they limit how much you can defer. But once you go past a threshold, 50 years of age, you're allowed to do what's called a catch-up contribution. We introduced these years ago so that workers that felt they hadn't saved enough, if they chose to, could defer more money into their retirement accounts. Now, with the new rule, they're making you do that on the Roth side of the contribution if you're a higher income earner. And that threshold is currently set at $145,000 and will inflation adjust up from here. So if you make more than $145,000 to utilize these catch-up contributions, you may only put the additional contribution in the Roth side. Now, I argue you should be doing that anyway, right? If you listen to me for any length of time, because I do not believe you'll be in significantly lower tax rates, this myth that's been portrayed in America in your retirement years. So I think it's not much ado about nothing, but the reason they do that is they want to make sure they're getting the tax revenue now to pay for the most recent legislative acts that were pushed through Congress this past summer. So, and again, this applies to the over 50 and also the over 60, the additional catch-up contribution that was put through last year as well.